But Menka Doshi is waiting with the TCS top team to speak to them. Over to you, Menka.
So thanks very much for that. I do have with me the CEO and MD of TCS, N Chandra. Good morning, Chandra. Well, we're done with FY14 and we're now on to FY15, but I'll spend a little bit of time talking about the fourth quarter gone by. Are you disappointed with the performance of the last quarter? I know you've said that Q4, Q3, seasonally weak quarters, but nonetheless, you've come in far below estimates. And when I say far below, I mean, you know, if you look at the original estimates, before you put out that profit warning in middle of March, they were expecting you to come in somewhere between 2.5% to 3% in terms of dollar revenue growth. You've finally done 1.9%, which is close to the revised estimates, but it's still very far away from what the original expectation was. What went wrong?
No, I think on the contrary, we feel good about the quarter. Here is why.
Yeah, sure.
First is we have delivered a volume growth of 2.6%.
Okay.
And our warning was nothing to do with the profits. We had clearly said it would be a muted quarter, primarily on account of India. And if you look at the international revenues for the previous year, which is the Q4 of FY13, and compare it to the Q4 of FY14, it's bang on the same number. Our international revenues are 2% on a constant currency and dollar terms. In FY14, it was the same in Q4 of FY13. So pretty much we are tracking the trend. It's just that India was a big push, grew almost 13-14% on a sequential basis in the Q4 of FY13, and this year it's pretty much flat. For the reasons that we explained. So I think all the indicators are very positive. Our deal pipeline is pretty robust. Closures have been really good, and there is a pickup in the discretionary spend in the digital. So that is why I gave a very positive commentary. Okay, fine.
I still think that, you know, there is some degree of disappointment with TCS's performance. It's also because you tend to continuously beat expectations, right? And therefore I think they're looking at the quarter gone by a little more dismally than you are looking at it.
I think the only thing is that you know, when the numbers are out, they don't get enough time to get into each one of these individual details. We've given a lot of commentary. I think if those analysts who look into each parameter, when they look into the details, they'll be happy.
Well, okay, right, that's how you look at it. I don't think that's how the street is currently looking at it. I'm a little disappointed with your pre-earnings meet, you know, that you had in March 18th. Why are you doing a meet 1 month before earnings and, you know, giving cues regarding what has worked or hasn't worked for the quarter, which is not on a public platform in that sense? So no, it's a short, simple question I want to put to you, not related to earnings, but nonetheless.
The pre-earnings meet is a concept that was set up several quarters ago. This is not the first time we've
No, I know that. I'm not saying no.
It is not selective. All the analysts are invited, and the information that is shared is put on the website.
Chandra, everybody revised their estimates for your dollar revenue growth downwards after that meeting.
And there are quarters.
It was a material meeting.
There are quarters in which they upgrade as well. So
yeah, I know, but it was a material meeting, and so I'm just wondering why are you doing this 1 month before earnings? You know, given that it's not a public platform.
It is a brief to all the analysts, and we put it on our website as well.
Also, in some sense, managing expectations, right? So, I mean, if they hadn't revised their estimates lower, you would have in fact disappointed the street far more if everybody had stuck to their 2.5% expectation.
This is not a sudden meeting. This is a scheduled meeting. It happens every quarter. And it has been a practice that we have followed for.
I know, I'm just questioning the practice, especially because of what has arisen this quarter. But anyways, you spoke of India being disappointing. You've flattened out in terms of, you know, at least the last 3 quarters you saw a contraction in the India business. You're flat to minorly positive this time. Have you stemmed the decline? Because the last year, which is FY14, has been quite terrible for your India business.
India business has been pretty muted, and we continue to feel that it will take time, at least till the elections are over. But where we are today, we believe that we have kind of hit the bottom, and it may continue at the current levels, may not see a significant growth for the next couple of quarters.
For the next couple of quarters. But in the last 2 quarters of FY15, you're saying there might be some revival in the India business?
We just have to wait and see.
Okay, fine, fair enough. Also, you know, in your client additions list, I noticed that you're short of 2 clients in the $50 million category. It might be a technicality in terms of size or something like that, but I'm wondering why you've gone down. I think you've gone down from 55 to 53. So
they have migrated to 100 million band.
Okay, so they're the ones who moved up in that sense. So in your 100 million acquisition that you spoke of, because you spoke of 7 new clients, right? in
On a
that. No,
year-on-year
two new
basis.
clients in that. So that's the one.
That's the one.
Two
Yeah,
have moved from 50 to 100. So they're not new acquisitions, so to speak. The scale of business, the size of business is increased.
This metrics, what it represents is a cumulative revenue for a 12-month period for all our clients. And this is typically always a metric where the clients move up from one bank to
No, fine, I get that. I was just curious because I saw that number change. So the two new $100 million clients that you're talking about are $50 million clients that have moved up, just so that I understand this correctly. Okay, I want to come to FY15 because that's where everybody's got their eye on. You've spoken of FY15 being much better than FY14. I want you to detail, if possible, why you think that way, what exactly is going to work in your favor, and include in that geography, verticals, pricing, all of this, and explain to us in detail with specifics why FY15 is going to be better than FY14.
Do you get an hour?
Sure, take it. No problem. We have all the time for TCS. Go ahead.
I think when we give commentary on the future, see, given that we don't give guidance, we have to use certain important factors. We try and look at 4 or 5 factors. The first one we look at is what we really hear from our clients, in the clients that we serve.
Sure.
The second data is the deal wins that we have had in the recent quarters and what is the order book looks like. The third one is the deals that we are pursuing, which are in different stages of the bid process, and what is the overall size, scale, the complexity, and what is the closure expected date, etc. The fourth one we look at is our ability to execute, and the fifth one is the discretionary spend. So I think looking at all these parameters for FY15, we feel there is a very good momentum, and based on which.
So how are each one of these going to improve in FY15 over FY14?
I think I said it in the call yesterday. If you look at the deal wins and the order book and the pipeline, they are significantly stronger where we are today.
Can you give us numbers to the order book?
We don't have these numbers.
Okay.
So, I mean, first of all,
when you say significantly, what does that mean in percentage band?
If I share it with you, we don't share it with anyone on a quarterly basis. So I can't certainly put out a number, first one. Second one is that it's for competitive reasons I cannot share it.
But can you give us what you mean by significantly better? Is significantly better single-digit growth, double-digit growth?
I think, you know, at the end of the day, what I'm not trying to do is to give you a spreadsheet. Okay, because then it will amount to giving guidance. I'm not giving you.
But your significant could be very different from my significance versus Macquarie or Nomura's or Morgan Stanley's significance.
And for every company you guys track, and you guys have to build how to interpret the qualitative commentary.
So deal flow order book significantly better
at the end of the day, it's a management commentary.
Deal flow order book significantly